thank you very much for joining Fusion Consulting Group's first webinar in our Fusion 360 Summer webinar series. And this one's, the title of this webinar is Forecasting and Cashflow, and is brought to you by Fusion Consulting Group's CFO as a Service line of business. So great to have you all with us. It's going to be a short but meaningful session on forecasting and cash flow. We will do a couple of minutes of introductions, and then we will try and help educate the group in terms of some tips and tricks in terms of your forecasting and cash flow models. And then right at the end, we can address any questions that you might have. Please feel free throughout the session to add your questions to the chat, and we'll address them right at the end there. So just to introduce myself and my co-lead of CFOaaS as a Service, David. Adam Bloch, CFOaaS as a Service Director here at Fusion Consulting Group. I've spent probably the best part of 25 years working with lots of different companies, startups, growth companies, mid-cap companies, established companies, helping them with the resourcing of experts into their business. And my colleague, David, is an award-winning CFO, has worked with established companies, public companies, but probably spent the best part of 10 to 15 years now working with startups and companies going through growth, supporting them with great financial advice and fantastic modeling. We work with young companies, with growth companies, providing them with part-time CFOs as a service, CFOs and finance directors, helping them with commercial advice, with financial advice, and we mainly focus on helping them with their reporting and their visibility on the performance of their business, helping them to scale and raise money, and also when they get to the point where they would like to sell their businesses, we're able to jump in. And there are many different types of scenarios where we can help on an ad hoc basis or on an ongoing basis. We work with companies in many different sectors, technology, professional services, product, FMCG, e-commerce. We've had some wonderful clients over the years, helping them to start, build and run. So as you can see from this slide here, a little bit of detail in terms of what our CFOs as a Service can bring to a business. It might be that you as an entrepreneur or you as an MD within a business need to focus on your dashboards, understand what is going on in your business, what are the levers and what are the pulleys that make your business perform better. Or it might be that you need help with your commercial negotiation with customers or suppliers, or as David is doing with one of his clients at the moment, looking at stock option schemes to help incentivize your employees over the medium and the long term. But this is the toolbox that we use and our CFOs and our finance directors use when we place them into a business. So wanted to bring in David now so that he can start talking to you about the meaningful things. But I guess, we're in a situation where, the world today is an interesting place. Lots of troublesome conflicts going on. There are over 50 elections going on in the world today. Music and art and the content industry continually evolves, with Taylor Swift taking the world by storm with her world tour, and the European Football Championships are about to start. But with all this wonderful life stuff going on, if you're looking to start and grow and run a business with great financial information and visibility, cash flow and forecasting is absolutely critical. So I'm going to hand over to David now. He's going to talk to you about those two items.
Thank you, Adam. Hi, everybody. So what I thought I'd do today is a very practical, short case study for a small company called Uphill Struggle Limited, and just going to walk through cash flow forecasting and the importance of it. So the agenda is really along the top there on the right. Why bother forecasting cash flow? Pretty obvious, really, but the answer is to know when and if you might have a problem with your cash flow and what to do about it. And in this particular example, what you're looking at is a format that I use in all the situations I go in. It's been built up over many years, and it's just having done this for so long, this sort of highlights quite quickly and instantly where the problems are. Yeah, so what you've got here is Uphill Struggle Limited, as it says top left, and it says that it needs funds on the 5th of July. If you look at the top here, it's very important when you're setting out a cash flow is to have a format so you can actually see the problem visibly. Now, I'm going to attempt to use the drawing on this, and hopefully you guys will see. But here, I'm hoping this comes up. Maybe, Evan, you can tell me if it does. In the week of the 5th of July, this business is going to have a funding requirement of £21,000. It actually says it over here on the top left, right up front. Funds needed 5th of July and the amount. And if you look, we'll get into a little bit of the detail in a second. It's got 3 weeks here where it's got a problem, but actually it's back into the black, positive 2960, the week of the 26th of July. So it's not all doom and gloom. It's just got a challenge here. And you can see the way I've built this, it pops up everywhere, funds needed, etc. So let's just get into a little bit of the detail. The second point here is format and how critical it is. Really, you want to know the pinch point. When's it going to happen and how much? What's going on at the top here, if I just highlight it again, is a simple summary of the key line items down below. So on one level, if you're me being the FD and you're working with the CEO or the management team, they don't necessarily need to know about all the detail that goes on down at the bottom. They just want to look along the top section here. And what you've got, forgive my terrible circles, but you can see cash in, cash out, the net cash flow, the balance, and in this particular business, there happens to be an overdraft facility. Can you see here of £50,000? So when we get to the week of the 5th of July, for example, the true cash balance in the bank would be minus 71,600 odd, but because they've got an overdraft facility of 50,000, the funding requirement's only 21,000. But all the MD or the management team need to know is they can look along here and they can see that there is a problem. The way this cash flow is built is the green columns here are the weekly actual figures. So I've done this actually as if from last Friday, 7th of June. This isn't a real company, it's obviously fictitious data. But you can see along here, you've got the weeks. And then over on the far right here, these add up to, sorry, my squiggles here. These add up to the months, if you can see. Now, ordinarily, I'm just crunching 3 months here. But as it says, third bullet down here, look as far down the road as possible, at least 12 months. So the cash flows that I have, you're going to have weeklies going out 12 months, summing up to the monthlies on the far right-hand side. Okay, if you get into just a little bit more detail, down at the side here, what we're identifying here is your income at the top, and here are your outgoings. In fact, this presentation is a little bit large. If you were to see the left-hand side, you could see money in and money out. But if we just focus on the income to begin with, what you can see here is there's a client, Bertie Bassett, another client called Orange Sherbet, Dib Dab, and along the top here, you can see the money that's going to be coming in from those clients, some here in the week of 5th of July. So one of the challenges is for this company is there's not much coming in over the next 4 weeks. Some of money trickling in here, but then the juicy stuff isn't coming in until the end of July. When you look now down at the expenses, obviously you've got some supplier payments here. And at the end of each month, typically, you've got two individuals that need paying, as well as PAYE. And the big problem this company has, if I undo that, is good old VAT. So it's got to fork over £40,000 the week of 5th of July. And that's the culprit that's putting this business into a negative position. Now, again, part of the cash flow forecasting is I know this way in advance here at the 7th of June. I can see this problem coming down the line, which is why this document, in any situation I go into, however it's sort of made up with the detail, is just fundamental to running the biz. Next bullet point down here on the right, I keep it up to date every week. So every week we're going through and we're updating for actuals here. And by talking to the ND or the management team, it's not just about updating the past, but it's also about updating the future. So for example, it could be this person here that's come on board. The question I would ask is, are there more employees coming? So you're not just looking in the rearview mirror, you're actually updating going forward. I'll undo some of these scribbles because it's looking like a horrible mess now. Yeah, so that this point here, keep it up to date on the right, minimum weekly. When you get into problems, which does happen, it's something you have to do daily, etc. The point at the bottom here, which is being hidden by Adam's lovely face and, well, mine less so lovely, is the fact that you can control your costs. You can't really control what your customers do up here in terms of paying. So another problem I always see is a lack of focus on collections. You can, of course, do stuff here. So you've got this situation. What do you do about it? Well, the obvious one in this particular scenario is I don't know how well we know Orange Sherbet as a customer. They're obviously quite a decent one because they're paying 25 grand here. If there's any way of pulling that forward, get on the phone to them. Maybe it's past due, you don't know. But that 25 grand, if it were to pull forward into this week here, you can see it would cover that 21,000. So that's one option. If that doesn't work, or there's no way, maybe this £40,000, not that I ever advocate doing it, but if there's a means to get on the phone to HMRC and have a conversation, because if you know that you're not going to get Orange Sherbet in until the 2nd of August, a call to HMRC to say, can we delay until that time? That just might get you through the situation. The point is about the forecasting is you've got this headlights, if you like, down the road. You can look ahead and you can see what's going on. Adam, if you wouldn't mind just flicking to the next slide.
Can I just ask a couple of questions, David?
Sure.
So you built this model and
I can't hear you, Ed, sorry.
Can you hear me now?
Go on.
Yeah, you've built this model, in my company many times as we've worked with clients. Some of them are more sophisticated models, some of them are less sophisticated. But what's the journey you go through when you start building a model with a client? What are the kind of things that you are asking a client to inform the cadence of the forecast and the cash flow?
What I do typically is I would have a template like this, but where you've got all of this, if I undo this here, if you look down the left here, this is a pretty simple list of expenses and income. What I would do is I would go into the bank account, these days accessed through Xero, QuickBooks or whatever, and I would export into Excel, probably start with 6 months worth of transactions. And I would literally rebuild a cash flow going back 3 or 6 months, get all the detail in there. That will give me a good start. I can see some obvious stuff, like if there's rent there, the rent's going to carry on. But I can probably build 60, 70% of the cash flow. Again, depending on complexity, it's harder for bigger businesses, international, what have you. But for a UK-based business, it doesn't take more than a day to get that picture up front. Then you sit down with the management team, you have a look at other information in the accounts, and you say, right, what's ahead, what's going on? And really within a few days, you can get a pretty decent cash flow going.
But that would include understanding, for example, the momentum that the business has in terms of its relationship with its suppliers or its relationships with its customers, because, as you say, the movement of revenue coming in has a massive impact on the performance of the business.
Absolutely. You can begin to ask questions around, is orange sherbet a good payer or not? And you can go in and you can have a look at the history there, and you build up a picture as to who's reliable, who isn't, who you can have a conversation with. As I say, this is a pretty basic template you're seeing here, but sitting behind it, I would often build like a trade debtor detailed tab, invoice by invoice. You can estimate when you think things are going to be paid, and it feeds through into this cash flow.
Yeah. I've got another couple of questions, but I'll let you crack on to the next screen first of all.
So really these are just sort of the two punchlines for the whole thing, really. This might look like a company that's in trouble, but it's not actually. It's profitable. You can see it's got some fairly decent invoice sizes, but I can tell you the way I built this sort of in the background is it's making decent money. The problem it has is people aren't paying quick enough in this example, and it's got a VAT bill. Most companies that don't plan properly get into cash flow challenges, if they're profitable. Where they get into cash flow challenges is around quarter end, when the VAT is due, and or month end, when the payroll is due. And inevitably, it's the difference between the P&L and the working capital. And put simply, you can send out an invoice for £100,000, but if you're not going to get that £100,000 for 5 months, you've got a cash flow problem. And then the second point there is just to say that if you haven't got one in the business, a good finance professional will operate with what I call a no surprises environment. It isn't easy, this stuff, especially, I've been in SME land for years and years and years now. But what I would say is, you have someone like me on board, it's about no surprises. You need to know that these things are coming. That's the importance of cash flow forecasting.
I have another question for you, David. Typically, when a client is building their own model, or someone is beginning to build a model for themselves or for a client, what are the mistakes that they can make? What are the things that they forget? Because, as you say, depending on the complexity of a business, a model can become, unwieldy or be fairly simple. But what are the mistakes that people make when they are building their models top down, bottom up?
I think one I've mentioned already, and it's the difference between the profit and loss and the cash flow. So you might have £100,000 worth of sales in January. That does not mean you're going to have £100,000 in your bank in January. You have £100,000 in your bank when the money comes in. So it's making assumptions around your collections of money from customers. But equally, the same is true with costs. It could be that if you pay someone £5,000 a month, that's in the P&L at £5,000. You're also going to have to pay them, because they'll be pretty upset if you don't. But it could be that you're able to buy product or services on terms. So you might have £5,000 for some kit or some product, but if you don't need in January, but if you don't need to pay that out until March, then that's a challenge. Also, capital expenditure. So you can put a P&L together, but a P&L doesn't include big items of capital equipment. That can often catch you. And then also unrealistic assumptions around sales growth. The classic one is when you hire somebody, a salesperson, in month 1. You assume, every business is different, of course, but you assume that person's going to hit the ground running and start selling in month 2, and it's all going to start going up and up from there. One thing I know, having done this for 30 years, any forecast I've ever put together never ever comes to pass. And inevitably, I've seen situations where hire somebody in month 1, sales starting in month 3. What normally happens is you hire somebody in month 1, there's a recruitment fee to pay. That's often been missed off the P&L. That's the cash flow. And even the greatest and the best take 3 to 6 months to ramp up. So you're not going to start to see some revenue coming through for a good time. And you can quickly turn a cash flow from only needing, say, 10 grand to needing 50 grand. Because it costs more to bring someone on board and takes longer for the sales to ramp up. Those are the main.
When you speak with entrepreneurs, guys that are looking to build their businesses, and we've come across some fantastic fantastically bright and smart individuals with great product or service ideas, and they're looking to take them to market. And often they have the capability to put models together. I'm just interested, what's the percentage of times where you've had to completely rebuild a model, or be able to improve the models that they've put together? And why would you decide to start from scratch? And why would you decide that actually that model seems okay? What's the indicators?
I would say more often than not, I start from scratch and I rebuild what I inherit. Sometimes there is a good level of detail where you'll have all the employees, all the revenue lines, all the cost lines, and there's some decent P&L work. But almost every time what I have to overlay, and this is where the corporate finance bit comes in, and it's more sophisticated obviously than what you're seeing here, and that is presenting the numbers in a way to a potential investor so that they can understand what their potential return is. So if I'm going to put £1 million into a business, I want to be able to see at a summary level over 3-4 years what that return's going to be back to me. And then they want to be able to run scenarios on it. So you need to be able to flex what happens if sales falls by 10%, what happens if costs are greater than 10%. That's another whole workshop in its own right. Invariably, I do end up rebuilding it.
Yeah. Okay. And also, just out of interest, how many times have you come across businesses that don't have models that should? I mean, it must be quite a lot, right?
Yeah, I would say any ambitious business that is looking to scale and grow has to have a financial model, a detailed cash flow forecast like this. Those are the two fundamental tools that any decent FD would have in his tool bag and is required. If you're running a lifestyle business and it's just about you or a couple of people and you're happy to sort of carry on doing your thing, you can get away with what you're seeing on the screen quite easily. But the moment you're looking to raise money and put a model in place, it's fundamental. You can't get to where you want to get to without it.
Yeah. Another question that springs to mind is, you've built your beautiful model. You've kind of understood the cadence of the business and the levers and the pulleys which translate into numbers. Or how often should you be looking at that? You said you go into it daily as the FD, but how often should the wider audience or the entrepreneur or the MD or the senior management team get to know about this? I mean, what's the interaction point?
I think when you build the model, it doesn't just sort of gather dust and sit somewhere. It's, if you like, it's your plan. So with something like this, what you're seeing on the screen, a detailed cash flow, as I said earlier, it needs to be updated, I think, on a weekly basis and reviewed. With the management team, you can sit down, unless there's a problem, you can sit down on a monthly basis and go through it. With the bigger sort of financial model, looking out 3 years, every month a management pack should be produced, and that management pack should be comparing how you've done with what you said you were going to do, and then what's the impact of that down the line. So certainly monthly. Again, someone like me coming in, good monthly discipline of tracking against where you said you were going to get to. Otherwise, how do you know where you're going?
Yeah, understand. That's great. Thank you. Well, thank you, everybody, for joining. I do want to remind you of a wonderful series of webinars that are coming up with the Fusion 360 Summer Series. We've just completed our forecasting and cash flow webinar, but as you can see, our legal line of business is running a webinar on the 27th. We have our tax division running a webinar on July the 11th, and we have Fusion Financial talking about corporate staff benefits on July the 25th, and Fusion Accountancy is going to be looking at 5 things your accountant should be doing for you on August the 8th. So lots of fun webinars coming up. So kind of to summarize for me, David, thank you for the presentation. For me, 3 things have come out of that. One, in terms of building a model for any business, it's really about understanding the information and the data and what moves things along, and making sure that data is accurate within the financial model. No surprises. Get behind the issues as quickly as possible to make sure there's enough money in the bank and that you can fund the business for growth. And I think that finally, making sure that these financial models are live, they're breathing in the business, and the business can sing to the tune of the model for improvement and better performance. So thank you very much, David. That's fantastic. To everybody, we will be following up with emails and details on future webinars delivered to you by CFO as a Service, Fusion CFO as a Service, but also by other lines of our business. Thank you very much for your time. In the meantime, as to finish, I'm going to be playing a video for you delivered to you by CFO as a Service, and you can either stay and watch that, or you can head off to your lunch. But thank you very much. Hi, my name is Adam Bloch. I run Fusion Consulting Group's CFO as a Service line of business. I'm here with David Bloom, my colleague and an award-winning CFO. We're here to tell you a little bit about our CFO as a Service. Fusion's CFO as a Service will support reporting, scaling, and corporate finance transactions, enabling you to achieve your goals. If you're a founder, a leader in a startup, an early stage or high growth business, and you're in need of some financial and commercial advice, then Fusion's CFO as a Service should be your first port of call. So David, why do companies need Fusion's CFO as a Service?
Adam, they need the service because if you are running an SME, an early stage business, and you are ambitious and you want to grow that business, really you need somebody to help you understand financially where you are at any point in time, but also just as importantly, where are you trying to get to? Because it's hard work whatever way you look at it, and it is about creating value for yourself, for your family, for shareholders, potential investors, etc. And what a CFO does, a good CFO acts as a very, very good foil to the business, and number two, supporting the leadership team in getting to where you were trying to get to.
And what are the elements that make up our CFO as a Service?
I would say it boils down to three core services. There is reporting, there is scaling, and there is corporate finance. So an example of each of those. Reporting is delivering quality management information, timely, consistently, every single month, that delivers the information in a way that the management team can understand. Inevitably, 80% of profit comes from 20% of the clients. The statutory accounts, the stuff that the accountant does at the end of the year, you don't really get those insights in the business. Whereas what a CFO will do is make sure the bookkeeping brings all the information together in a way that allows for informed decision making. That's reporting. Scaling is if you really want to go for it and you're potentially looking for investment, you're going to need things like a financial model. Inevitably, when we come into SMEs, there isn't that long-range 3-5 year dynamic model that links your profit and loss, your balance sheet and your cash flow with all sorts of assumptions. And that would be an example of the scaling service. And then alongside that, you might want to reward your staff with stock options. So putting in stock option schemes, sales commission schemes, etc. And then corporate finance, you've got the reporting every single month, you've got the model, you understand where you're going, you've got the right incentive schemes in place, but now maybe you're looking to exit at some point or merge with another company. So the corporate finance piece is looking at that really. It's putting two businesses side by side, it's looking at the right funding structures through debt or equity, making sure you get the most value for the business, or if you're buying a business, getting it for the best possible price and doing it in the most capital efficient way. Those would be the three examples.
Thank you, David. So we've talked about reporting, scaling, and corporate finance. There are some simple times when companies need our service. What are they?
Simple would be surprises. Okay, a good CFO coming in will always try and put in place a no surprises environment. But inevitably, we get called in because we'll get things like, I'm working so hard, I thought my revenue was good, I'm not making any money, and now I've got a cash flow problem. Typically around payroll, VAT, year-end accounting, when you've got to pay your tax. If you haven't got that detailed insight to cash flow, and you haven't got that 12-month visibility, that's an example where we'll often get a call to come in and assist. The bookkeeping is one thing, but all the bookkeeping will do is it will tell you at the end of the month whether or not you're going to hit an iceberg, by which time it could be too late.
Thank you, David. So we've talked about reporting, scaling, and corporate finance transactions, and the situations where Fusion's CFO as a service line of business can help you and your company. If you would like to find out more about our service, then please do be in contact. I look forward to speaking with you.